And we are live. So today is a really exciting day for me. So I've basically followed Bryan Bottarelli for several years now. And you guys that are watching this live, and more people will watch this in the replay, but you guys that are watching this live will probably know Bryan from his service from Trade of the Day Plus, and obviously like his core main service, which is the War Room, which has been running for quite a few years now. So I thought I'd give a brief introduction and then have Bryan introduce himself. But what I'm really excited about today is to talk about Bryan's new service, which is all about turning these government reports, these pesky government reports, into quick overnight profits with just one overnight trade once a week, although there might be bonuses, and we'll get into all of that as we go through this live webinar, which is going to be really exciting. So basically, I'm super excited about having you, Bryan, on this channel. Never thought I'd actually have you on, so it's great to have you.
Yeah, you bet. I mean, I'm glad you have the channel. Glad you invited me. Excited to be here.
Yeah, and I think one of the things that I'm most excited about is people have been scared of these government reports. So they've been, these people, like myself included, will sit on the sidelines when these reports are coming out because we're terrified. We're scared that the market is going to go really volatile and go against us really hard. And I think it takes some perspicacity for you and other people that are involved in trading these events. Like, I think it takes some real insight and shrewdness to really trade these properly. And I think that's such a really amazing idea that you guys have come up with for the service. And before we go any further, I want to make it completely crystal clear. I'm an affiliate for Monument Traders Alliance. And so any links that I post either in the live here in the chat or in the replay for you guys that are watching the replay are my affiliate links. So I will receive a commission for that, but I only promote products that I really believe in. So I really believe in Bryan. I know a lot of Bryan's colleagues. I've watched Bryan trade in the War Room for years. And so I'm really excited to have him as a guest on my channel here. So I'm really excited, Bryan. So if you could maybe give us a quick introduction to your background as a trader for the very few people that probably don't know who you are. There's a lot of people that I'm sure watching this that know who you are already, and they're following some of your trades and are like really excited to have this conversation with you. So there'll be a few that don't. So it'd be really awesome to hear a little bit from you about your background directly.
Yeah, sure. I started off with learning my trading career in probably the best way possible, which was trading, .com stocks in my dorm room in college. Right? Like right around 99, 80, 98, 99, right? And getting hooked on like, holy crap, I just bought shares at Yahoo and they're up 50% in 2 days. I kind of like this. I got to go to class now. And then from there, parlay that into, the CBOE, a trading firm, was interviewing at the business school in Indiana. So I interviewed there, and the guy happened to be a compact computer trader, which I owned, and it was down like $4 that day because Dell Computer was better than Compact. Both of us like connected right away. I'm just like, I'm so pissed off that Compact down. He's like, me too. And then like the whole thing just got blown to hell because we just talked about that the whole time. 2 days later, I had a second interview. I was in Chicago, and then was on a trading firm in on the pit of the CBOE during the .com kind of like boom and then bust cycle. So, at the time, volatility was just crazy, right? But it was great for me because I was taught to trade and taught to learn in one of the most volatile up and down markets that you'll ever see. So it was a great learning experience because I saw Qualcomm go up to $600 a share, and then blink my, one of the Qualcomm traders was bragging about he's up $1.4 million that month. Then 2 months later, the market crashes. Dude's down 600 grand, and he's fired. He's out of the firm. So it was kind of like it taught me right away to be like, hey, up markets are great, but markets come down just as quickly. So as a trader, you always have to be like buying and selling. It's a two-way street, not a one-way directional street. And the market has been going up for the past couple of years, which is great, but that the rug is going to be pulled sometime. So like from the very first time that I learned to fish or to ride a bike, I learned that markets go up and down, and I always keep it in the back of my mind. Like, I don't want to be that Qualcomm trader who thinks he's up 1.4 million one month, down 600 grand the next month, and out of a job then. So that kind of like was how I started and just got my feet wet in the whole
Yeah.
of trading.
Cool.
From there, I'm like, well, this is great. I love this, but you know, I don't really see myself standing in the pit of a trading floor for the next 30 years of my life. So I parlayed that into launching my own options letter, and you know, here we are today. So that's my Cliff Notes version of how I got here.
Definitely, and then so I've been part of the war room as well, and I've seen the quality of your trade. So I'm really excited for this new service in particular. So why don't we just dive into what this is? So I know the people watching right now, I'm seeing some comments about the tiers like we talked about before we went live here, and I just told somebody that that they're going to get rolled into the 179 tier, right? So we can pull that up or whatnot. But yeah, so there's a few people here from Trade of the Day Plus already just saying hello, good evening. So yeah, good evening everybody. Or for good evening would be the UK, I think, right? Like that'd be the UK would be the evening. So good afternoon. William Calloway's here. Amar Ray's here. Fantastic. Yeah. So we've got a few people watching, and so yeah. So let's get into the meat and potatoes of this new service. And I think this is one of the most exciting parts of it is that the Catalyst Cash Out Live service that you're just launching is basically it's like what everybody looks for, right? It's what people want to be able to do is they don't want to get caught with just calls or just puts overnight into some sort of crazy like government report, like the FOMC stuff or like the PPI or any of this stuff. Because like we avoid the market. We're scared as retail traders. We're scared to trade these things because absolutely guaranteed if you take calls, the market will tank on the report. If you take puts, the market will rally on the report, and it doesn't matter. And so your approach has been like completely different. You're like, look, this is what we're going to do. So what is it that you're doing in Catalyst Cash Out Lives that is so effective compared to the other?
You just want to just dive right into this, don't you, man? You said you were excited. You weren't kidding. So okay. So here's kind of how this new service was structured. Okay, I began trading options, and of course, the biggest days on any stock is on earnings day, right? So I remember in the CBOE trading pit, like AOL was a big internet stock at the time, and typical days there was a lot of people in there, but like sometimes I would walk in and the AOL pit was just like overflowing with people. And I'm just like, what the hell is going on? I'm like, oh, AOL is reporting earnings today. That's why, right? So clearly everyone else, everyone watching this knows that when a company, whether it be Netflix or Meta or Nvidia, like when it's earnings day, like that stock is going to most likely make a big move, right? So what I started doing was trading a call put combo around earnings. And essentially, if the stock goes, the way I structured the trades, if the stock went up 5 to 10%, I would make money, or if the stock went down 5 to 10%, I would make money. So I just play a call put combo. It's a strangle trade. It's a very basic trade. If you have like a level 1 or even a level 2 options trading, you can make these trades really simple. And I had a lot of success playing stocks that make big moves on earnings day. Like I wasn't playing a direction. I wasn't flipping the coin. I wasn't, like you're saying, guessing if it's going to go up or down. As long as it moved large enough, it was a big winning trade. And as I look back at my trading experience over the last 5-10 years, these are the biggest winners I've ever had has come using this methodology. Now, when it comes to this new service, right? Two things have really kind of come together that's made this possible, right? Every month there's a number of different governmental earnings reports, and I started to view these reports as almost like they're earnings reports for the American economy. Okay, so instead of waiting only for 4 earnings reports on Netflix through the course of a year, we're getting earnings reports on the status of the American economy on a weekly basis, whether it be jobs numbers or inflation numbers or you name it, right? These are the ones that Steve Leisman's always on CNBC, like going with Rick Santorum, oh my God, blah, blah, like they're all reacting. And those are big market moving news events, right? Up until now, those have been very difficult for any trader to profit off, because you would have to probably buy a month-long option on the Dow Diamonds or the S&P or the Triple Q, and those are very expensive. Like you'd be playing an entire month worth of premium for one particular news event, and then if you pair that call put combo, you're paying for 2 premiums, right? And you have, okay. So what happened recently, which is so awesome, right, is you've seen this just absolute explosion in trading volumes and popularity of 0-day options. And these are defined as options that expire within a 24-hour period or maybe 48 hours, right?
Interesting, because I keep getting this question. Sorry to interrupt you, but people keep saying these are not 0 DTE options. These are 1 DTE options. And I'm like, okay, I'll ask them about that, because I've seen people both.
I'm basically saying, I'm calling 0-day or 1 day or 2. Like those are all synonymous to me. It's all within a 1, 2, 3, 4 day period, right? Anything that's less than a week, I'm in my mind, I'm referring to as a 0-day option. So the great thing about these is they're super, super cheap to play. Okay. So for example, if you know that there's going to be an inflation report, say the inflation report is coming out tomorrow. Okay. We did a study, and we can get into this. We looked back at every single governmental release. There's the CPI, there's the PPI, there's inflation, there's the JOLTs report, which is jobs opening labor turnover survey. We looked at all of these reports, and we said, okay, what would happen if we played a 0-day option right the day before this news event, this governmental like economic release happened, right? And we tracked every single one of these, and what we found was just like, holy crap, we've got something here. So we can get into that, but the theory is you take a known release of a governmental earnings report and governmental economic report, I should say, and you then trade a 0-day option on the SPY. You trade a call put combo. You typically they're like $300 total for that call put combo for one contract of each.
That's low. That's good.
It's super low, right? You could buy 10 contracts. You could buy 1 contract.
So you're not risking much. Yeah, that's good.
So then the report is coming out, tomorrow. Today, you would make that trade by the call put combo on the SPY. The next day, the report comes out. Oh my gosh, inflation's going up. The markets hate it. Everyone's freaking out. Big market move. That call put the puts, if the market goes down, the puts in that situation would rise so much that it would account for both the call and the put. So you could maybe like double your money if you paid 3 for the call put combo. The puts alone the next day 6. So this only can happen today, and we're only trading these for around that one particular report. So when we combine the 0-day options with these economic news releases, which we've never been able to profit from, now we have something special here. And that's why you're excited. That's why I'm excited. That's why I could keep rambling on about this, but this is something really big.
Yeah, it's extremely exciting. We're getting a lot of people asking questions, so we'll get to all your questions, guys. I think it's important that we hear from Bryan here directly, because he'll answer most of your questions as we talk, right? So, but I'll put some questions up soon. But this is fantastic. Yeah. So one of the questions I got not here right now was like, if you buy a call and a put, and basically the market goes up a lot, doesn't the put cancel out the call, right? That's one of people's questions I've had. Like, and I don't trade straddles or strangles particularly. These are all buy side, right? You're not selling options here. You're buying options.
We're buying both of them. So just for the sake of argument, say the S&P, the SPY is at 515. Okay, we would buy in this case the 516 call, which is one strike above the 5, and then the 514 put. So we have the SPY is trading at this level, so we would own the call here and then the put here. So with these trades, one side of the trade is always going to be a loser. If the market tanks, right? The calls that you paid $1.50 for are going to go to zero. The puts that you paid $1.50 for might go up to $6.
Right.
So ultimately, you look at the aggregate. You paid $3 to enter this. Calls are zero, puts are $6. You doubled your money. So who cares that the calls are worthless? The puts doubled your money on that trade. So when these trades, these trades are, you're never going to make money on both sides.
Of course,
not how it works, right?
Yeah.
So yeah, you are going to have a loss on one side, but the gain on the other side is going to more than account for that loss, and that's how these trades are structured.
Great. Yeah, it's fantastic. I'm excited. It's a little bit different. So are you doing straddles and strangles? I know there's a slight difference between the two.
Yeah, it'll be a strangle because the two strike prices are different. A straddle would be if we bought, again, if the S&P was 515, we bought a strangle would be the two different. A straddle would be the strike price is the same. So it would be the 515 call put.
Right.
Do a strangle. So we want to kind of bracket. I call it bracketing the index level, one higher, one strike price above and one strike price below.
Right. And again, guys, this is called Catalyst Cashouts Live. So there's a live stream, I think, every Tuesday at 2 p.m. Is that right?
Yeah. So what we're going to do is we're going to go live, my partner Karim and I, every week at 2 Eastern. And we're going to pull up the economic calendar and we're going to say like, okay, here we are. We're live. It's Tuesday at 2. We have this report coming out tomorrow and this report coming out Thursday and this report coming out Friday. So here's the trade we're going to make around that report. And we'll just post it up live. I'll share my screen. I'll show you like the exact S&P, SPY contract that I'm checking out. And then we will just issue the trade, and you can kind of like see the entire process unfold right before your eyes. And on days that there's not a great economic report, then we'll find another catalyst to trade, whether it be a stock or an option or anything like that. But essentially, we really want to focus on these governmental economic reports because that's the real uniqueness and newness of this strategy, combining those releases which previously were very difficult to trade around and profit from. Now there's 0-day options. Now it's like a cash machine. It's an ATM machine waiting to go off, and we know the PIN number. So that's why we want to focus on those events.
Definitely. And we can get into some questions about this exactly. Can you see on your screen, I've shared a question that somebody just put up.
Oh, okay. The big one that just came up here from Ali 3.
Yeah, that's right. So he's curious about whether we're going to have bonus trades or whether it's just going to be Tuesday going into Wednesday because the different profit, like the basically the economic calendar varies as far as I know. I'm not super into
it. Yes. So the economic calendar does vary. And the great thing about going live is we can completely just tinker with the trade depending on that situation. So if we're live Tuesday and the report is coming out Wednesday morning, we'll put the trade out right there. But if the economic report isn't coming out until Thursday, I will just kind of I will model that trade and be like, here's what I'm looking at, but I'll email you the exact trade tomorrow just to get the right kind of entry prices and entry levels. So I don't want to say like it's going to be every single Tuesday it's going to be trade. We're going to try. Mostly we're going to try to, but we have the flexibility to adjust our entry and send you the trade on Wednesday if that calendar, depending on how those economic news events fall on that any given month.
Yeah, this is insane value. So I'm just typed that into the comments. I'm like, this is crazy value for $179 per year. That's basically what, $5, $4 a week. So like a coffee at Starbucks, you're getting these amazing like straddle strangle type trades. Basically profiting from the government who are taking all our money at the moment, right, for taxes. So giving some back.
Yeah, that's an entirely different YouTube session.
You probably shouldn't go down that road, yeah, because we want to keep this kind of concise, to the point. I mean, your time is really valuable, and I really appreciate you being here. So let's go through some questions. So
okay.
One question somebody has here is, how fast will we need to get in on the trade when you post? People are worried about that with alert services. Yeah.
Yeah, it's a good question from Mr. Ray. If we go live at 2, the market will close, within 2 hours of that broadcast. So if you could enter that trade, if there is a live trade, if you could enter that trade within the hours of when we post it and when the market closes on that day, that would probably be most ideal, because if you don't, the next day the ADP report comes out and there's jobs created, the market's loving it, Dow's up 400 points, S&P's up, no, that's too late, right? So we're going to give you kind of like a 2-hour window if there's a live trade that day. If not, I could just kind of like set the table for the trade, and then the next day I will email out, hey, here's the trade that get into at current levels, and kind of walk you through that. But essentially what we want to do, and the reason why this live component I think is so important, is markets are moving and adjusting like faster than ever before in history, right? Like, it's not like you could like read get the stock tips from the paper anymore. Like, things are happening second by second, and our ability to go live allows us to just adjust in real time any single trade that we need to, and give you the exact trade to make depending on like that particular tick that's happening in the market. So that's why we like this live component. But we will be walking you through all of these trades and giving you the exact entry, and then we have like a preset profit taking strategy as well.
Perfect. No, that sounds great. And so let's get into the weeds for the final sort of section of this presentation or this webinar. So I've been putting these questions up for you guys that are watching this on the replay. But if you have any other questions, I'll make sure that they're addressed in the comments once this is published. But one of the questions here is quite technical. So what we'll probably have to do here is share the screen share of the actual order form. So I'll do that just now. So if you can read the question at the moment, Brian, I'll actually share my screen.
The standard subscription and the basic subscription. Well, are those both? Is one a year, or one a lifetime, or one a 6-month membership, or does one come with certain special reports or bonuses? This is a new service. Like this, we are just launching this right now. So it looks like the best deal would probably be the $179 all access deal right there that you're showing on screen, and that gives access to all of these reports. And it's important here. Let me bring this up. We haven't even touched on this, Russell. JOLTs. You're going to see JOLTs referred to
right up the top left here. JOLTs overnight trades. Yeah.
JOLTs is the Jobs Opening Labor Turnover Survey, and why we are emphasizing that one is because that comes out 12 times a year, and based on all of our studies over the last year, that is the one report that creates the biggest market moves out of any of them. The JOLTs report just makes that is one we want to trade every single month. That's the one that has produced the best success rate and the highest percentage returns based on all of our studies and our back tests. So we're going to be like laser focused on trading all 12 of the JOLTs reports. Now we are going to trade, the other ones too, CPI, PPI, sometimes the Fed, sometimes inflation report, jobs numbers, like all of that is important. But when you see JOLTs referred to multiple times, that's because the JOLTs report is the one that if you focus on nothing else, focusing on those 12 will be like those are the ones that are going to make you the most money based on what we've tested out.
Quality over quantity, right? But you could do the JOLTs alone, or you could take every single trade you guys produce every week. So
here it is. So during 2023, last year, 12 JOLTs reports, they had trading this methodology, it had an 83% win rate, and the average return per trade, winners and losers, was 114%. So yeah, like this is the one that you want to focus on. Like the two losers were 6% and 30%. The winners were 252%, 326%, and then 58, 165. So like this is it. The JOLTs is the one that you want to do with when you're averaging 114% per win with an 83% rate. Like that's insane. That is unheard of, and that's when like for us this really came to pass. Like this is something. The government combine these reports with the 0-day methodology. There's nothing like it.
Absolutely. And I've taken a look at the raw data, and we can show that if people want. We can talk about that very quickly. Vincent is asking, so he asked what's the difference between the basic sub and the standard sub at 179. To me, like you want to go with the 179, right? You get all these bonus reports, like you get the live streams, you get the one quick question from me actually is like, are you guys doing the usual email plus app type of thing, or are you just doing email, or are you just doing the live? What's the deal with that?
We're planning to do the live. We're planning to email out any trades that need to be followed up on, and then we're also planning to email out a replay of that live session later that day for anyone who happened to just miss it or be at the pickleball court when we're going live or whatever else, have an appointment, going out to lunch with someone. So it's going to be the live component combined with the email component as well.
Sweet. So Ollie3's got another question for you. Will the plan be to let the options expire or sell at some point during the day when you're happy with the profit? That's a very good question.
Yeah, like the exit strategy is always the most critical component of any trading strategy. So what we want to do is we're going to have kind of like a preset profit plan in place ahead of time. And we're going to be adjusting this month by month based on our historical data that we found about how each report leads to profits. But just as a general base, I walked through this in my presentation that I posted, the whole link there. But essentially, we're going to aim, we kind of do like a 50 and 100% target. So for example, if you make your trade on Tuesday, you wake up on Wednesday, if your trade is up 50%, we say to like sell half of your position. Then if the trade moves up to 100%, you sell the remaining half of the position and you're totally out. That's it, right? Granted, sometimes it's going to gap up and you're up 300%. Well, even better then. Take the money and run, right? On the flip side, if it gaps down 50%, we'll just say close that position and just move on to the next one. But ultimately, we're going to have a preset profit plan in place ahead of time, so you know exactly when to take your profits incrementally on the way up or on the way down.
Sweet. And then that's an awesome answer. And I think we're getting to all you guys' questions really quickly here. Chipper30 says, how did they back test this and how far in the past did they go? That's a good question. Very, very astute question.
Yeah. Well, the back test went back to as far as we could go. I believe it was like mid 2022, which is when 0-day options really started to become popular and become tradable. So this is actually a very, when I say that this is kind of a revolutionary strategy, because it is like brand new. This is completely brand new because it's only been the rise of 0-day options and the popularity of has now given birth to this strategy becoming into effect. So we did a back to answer Chipper's question. We did a back test as far back as we could based on the trading volumes of 0-day options. So everything that we've discovered and everything that we've modeled out, and actually, Russell, what I sent you, all of our back test data was essentially 2023 and then parts of 2022. And that was because we could only trade 0-day options during those particular times. So a year and a half, give or take, is how long this back test has lasted to make a short answer to a longer answer.
Yeah, definitely. And I know you guys do all your research and due diligence really, really thoroughly. And I can share the link with people to look at that data. And I'm sure you guys will want to see it. You can also email me at stockalertsreviewed@protonmail.com if you want to see that data as well. So we can show it if we have time. I just don't know how much time we have. We want to be focused here. So we want to make sure that you guys know what you're getting here. So one quick question I have for you, Bryan, is were these government reports always such a big deal? I don't remember ever having an issue with these things years ago. I started trading about a decade ago, but I was trading penny stocks and doing day trades and things. I wasn't really like that focused on these government reports. In your experience, were these reports like such a big deal? Like, did they always do this, or is this a recent thing? Like,
I think that they've always kind of been in the background, right? Like, back in the market, when the market is rising, it's getting like, higher and higher and higher. Well, I mean, I remember, back in the early days, a 100-point move on the Dow, that was a big deal. That was a big day, right? Well, nowadays, a 500-point Dow move is kind of one that we're seeing on a regular basis. So if anything, that these government reports are now becoming a bigger deal because they are triggering bigger market moves. So
right.
That's kind of what we're seeing here. Like investors are, you know how they react too much on the upside and they react way too much on the downside. The sky could be falling one day and then it's just like rainbows and clovers the next day, all depending on what news data point came out. So what we're seeing and what we're realizing is that these government reports, a couple of years ago, no one really paid attention to them. But now, as volatility is increasing and the markets are getting higher and higher, they are becoming far more critical and far more important to traders every day, their movements every day, and how it impacts the market. So what better way to profit off this thing than to trading it with these Tuesday live catalyst cash out trades? That's why I think we're kind of at the forefront. We're in the front of the line when it comes to cashing in on these things, and especially with this strategy.
Definitely. And I've seen some comments from people, and I don't want to get into too much stuff because we have so many questions here you wouldn't believe. It just keeps going on and on. So I'm not going to go into all that. Let's just keep going. So Sean King says, having never traded options before, how easy is this to do for a noob? That's easy. As long as you can learn how to buy a call and buy a put and do that at the same time, this is an easy strategy to do it. And you can learn from YouTube or Google how to do that on your own brokerage account. Like, it's really easy. It's no big deal whatsoever. So you just have to learn.
I'm kind of the opinion of, like, teach a man to fish and he eats forever, right? I mean, for $179 for an entire year, like, the first week could be your education class in how to trade, and then from there it's just gravy. This is kind of a teaching a lifelong wealth building skill, and we're going to do it together live. We're going to walk through the trades. We have an entire library and tutorial section that kind of shows a bunch of new traders how to do this. And for Sean King's question here, we've been running, a number of different trading services, particularly the War Room, for 5 years. And over the course of that 5 years, we've had thousands of people saying, I've never traded options before. I'm new at this. What am I doing? And we guide them and we hold their hand and we say, just follow along. And just like that, they're like, they get it. It clicks. I should have been doing this my whole life. I'm comfortable trading now. So we are very familiar and versed in taking someone who's a new trader, introducing them to what we do, having them look over their shoulder, having them follow our trades. And next thing you know it, they get it and they're clicking, they're making money, they're posting testimonials, and they're happy campers.
Definitely. Yeah, and I assured everybody I'd answer every question. I do moderate the questions, and so some of them, most of them are absolutely like superb, intelligent questions. Only three spoke a question here. He says, what does Bryan get out of it if we are making money from your alerts? Why do this? Well, my quick answer for that is, why not trade your own trade alerts and make money with people that are following you? I mean, it's just common business sense. Is that kind of how you probably get this quite a bit, right? Like, why do you run a trade service?
Yeah, because
you're making money from your own trades. I mean, to me, it's obvious, but to a lot of people, it feels like, oh, he's making $1 million a year. Why would he sell like a service? I get this a lot, like all the time. And I always say it's because he's a smart entrepreneur, like whoever it is they're talking about. So, yeah.
Yeah, no, I think first and foremost, I love trading. I love it. I freaking love it, man. And it doesn't, I lose nothing. I lose nothing by sharing my winning trades with other people. You know, the Wall Street Journal just did a study, and they found that 60% of the trading volume on the SPY is now through 0-day options. So what that means is, like, these things are so liquid that it doesn't matter if I put my trade out to one person or 10 people or 10,000 people. I lose nothing by sharing that trade with other people. So why wouldn't I? Why wouldn't I? Like, if people want to learn how to trade and profit and change their lives, like, and I could be the one to help guide them and do it alongside of profiting myself. Like, why wouldn't I do that? It's a no-brainer for me. This is what I love. It's what I love to do.
100%, 100%. That actually answers somebody else's question, which was, will this scale? Like, if you do the strategy and you start bringing in 1,000, 10,000, 20,000, 100,000 subscribers, like, will this affect the limit orders? Like, is this going to scale? Is kind of
I think it's going to be fine. The CBOE and options trading was designed specifically to handle huge amounts of volume. Like the SPY, which is what we're going to trade on these, it's probably the most heavily traded, you know, ticker symbol throughout the entire world, I would say. So the liquidity, it is designed to build liquidity. I'm not going to be recommending some option that only trades, 8 contracts per day. Like, there's thousands of contracts trading on this. So even if we do just scale, like the person saying, it's not going to be an issue.
Yeah, and so Mr. Ray here is saying, how important will it be to be within your limit prices? That depends on your risk, right? Sometimes these things will move, sometimes they won't before, you see the alert. Like, that's...
Yeah, and I tell people, if I say buy this call put combo for $3, and by the time you look at it, it's 305. You're 5 cents over. I mean, close enough, right? Yeah. Like, I don't want to let 5 cents allow you to not make a trade that's worth $6 and doubles your money overnight. If that trade goes up, 10% above my price, maybe you let that one go. But if you're in that 0 to 5, 6, 7, 8% range, if you're in a dime or within a dime or 20 cents, you could still make the trade. I don't want you chasing stuff, but close enough, right?
Right. And you can always paper trade it. This will always tell people you can paper trade the first few things. To answer some people's questions here, this is replacing Trade of the Day Plus. So this will be, if you're part of Trade of the Day Plus, this is now what you'll get. And I know a lot of people are more excited about this because it's a much more exciting service. At least it is to me. And I know a lot of people are like, oh, this Trade of the Day Plus is stocks. I kind of wanted something more exciting. Well, it doesn't get more exciting than this. This is crazy, awesome, 0 DTE, overnight profits. So this is
when the first iPhone came out, is like iPhone 1, and now what are we on, iPhone 15 or something? This is just the evolution of the Trade of the Day Plus service, which is now evolving into Catalyst cash outs. And if you're a Trade of the Day Plus member right now, you're set. You're in. Like, your service, grandfathers you into this new service. So we're still going to give, Krim and I are still going to give stock picks. We're still going to give some options picks, but we're also going to combine those with all of these economic report Catalyst cash out picks, and that's really the exciting thing about this entire strategy, because you look at the calendar. There's going to be a lot of economic reports, but there's going to be some weeks that don't have economic reports. So there's going to be some weeks that just don't, an off week, a market holiday week. Well, those weeks, though, we're going to reserve those for doing what we do best, which is also giving stock picks and options picks. So this is kind of the best of both worlds combined with
this absolutely. No, that's exciting. I'm glad to hear you say that. So the people that joined Trade of the Day Plus for the stock picks will still get stock picks occasionally. It's just we're shifting directions a little bit here, or quite significantly here, but still, that's awesome. So Chipper30 says, what is the exit strategy? Is it a set % objective, or will it depend on the day? I think we covered that a little bit, but maybe it's worth elaborating a little bit more on that, just because people are always very particular about this. Like,
so we did cover this. It's covered when you join. We have an entire within all of those reports and stuff. We have an entire exit strategy that we line up. But here, I'll flip. This is what I sent you, Russell. So on a JOLTs trade, right? We have an 83% win rate with 114% average gain per pick. On those JOLTs reports, we're going to be aiming for a 100% profit target on those particular trades. Now, the PPI, right, that track record is a little bit different. We have a 75% win rate trading the PPI, and the average return also is 75%. So on those trades, I'm going to conservatively aim for a 50% profit target on those ones. So the point is, I have all of this data, all this back-tested data that we've done. We have it all in front of us. We have it all analyzed. And every single profit target is going to be adjusted based on what the data is telling us. And that's what we're going to go through live every single week with this, and follow up via email if we need to. So it's a moving target. There is no set in stone rule book when it comes to the stock market. The stock market is all about having the skill and the precision and the ability to adjust on the fly. And that's what we're going to be doing live and sharing with you every single week.
Definitely. And just some clarification on the push notifications. I know Nate Bear Service does push notifications, or I think he does. I've never signed up for the app or anything. Are you doing that, or are you just doing email on the live?
Yep,
So
we have those as well. So you just download your app. You get your push notices if ever there's information that needs to be conveyed. So if you're on the go or out away from your computer, got you covered.
Oh, okay, great. So these questions are going on and on. Do you have a set time? I mean, we could probably limit this to 1 hour if you want. I don't know what you have going on in your schedule.
Yeah. I mean, why don't we just try to cover the main points? I also have an entire new presentation that really dives into the nuts and bolts of this entire strategy. If you want to post that link, if you can, within the chat, we could do that. So a lot of the questions can be addressed in that one presentation that I just posted as well. But I'm happy to keep rolling, Russell, if you want to just keep going.
Well, let me post the VSL. So is that just the video sales letter where you do the video? It only takes 10 minutes or something to watch. Do you want me to post that link? I haven't actually posted it yet in the chat, so I could post the VSL link.
You could post that. Let me get to Coconut's question here. Maybe he likes to stay hydrated with his coconut water. Maybe he lives on a beach somewhere. I don't know. Will this type of trade work for Fed Open Market Committee and other events? Okay, so this is important. This is one that actually surprised me a little bit. We did study this strategy on Fed announcements, and it does work, but the other reports, the other economic releases are stronger. And the reason I think that happens is a number of reasons. First, when it comes to like a Fed announcement, like the market pretty much knows with 80 to 90% certainty what the Fed is going to say. We're going to raise rates, we're going to cut rates, or we're going to stay the same, right? Like there's not really too much of a surprise. However, when it comes to Fed market reports, the surprise typically comes during the podium session, is what I call it. Like when Jerome Powell gets up on the podium and does his Q&A and says something off the cusp, and then the market reacts to that. And, oh my God, he used the word "and" instead of "the," and then the 300-point mark. That's where the big moves on Fed Day happen. But what's interesting is that doesn't, like, the Fed will make their announcement around 2:00, and the market it'll kind of move up and down a little bit, but the big move will come like 40 minutes later, 50 minutes, an hour later, right? For these particular trades, I prefer to have the economic report come out and the market immediately react. That's what we want. That's what we're going for. So although the Fed, it's common to think that like the Fed might be one of the best ones to play. It's just okay. Like, when we might still play it, especially when the market's, not sure about a Fed Open Market Committee report. But we've learned through our due diligence and our back study that JOLTs and particularly the PPI are the two reports that we really want to focus on.
Pretty cool.
Which is a little surprising, but the data speaks for itself.
Yeah, and again, if people want to see the data, we can probably have time to show it here. If not, you can email me and I'll send it to you, or we can talk about it in the Facebook group or whatever. It's fantastic. These guys have done their due diligence. They're not just pulling numbers out of the hat here. So Tim Thompson has a question. It says, is this part of Trade of the Day Plus? We've already covered that. So it is, yes, you'll be rolled into the service. And then CRCR says, is the service auto-renewal? And if so, is the price likely to vastly increase in year 2? So people worry about that kind of thing. Like if you're going to get them in at 179, which is a bargain. It's an absolute bargain. I mean, it really is. And then they worry that you're going to then charge them like $1,000 for the next year or something. So I wonder
if we're raising the price, which, I mean, look, the marketers, I don't know, these guys look at the bean counters might raise the price to 1,000, but if they raise the price, that means that a subscriber made 30 grand or 50 grand. So the price rise will be justified. So if we could support $1,000 price, that means a ton of people are making money. So maybe they'll do that. I don't know, but I think there might be a lifetime offer or a 2-year offer that you could take if you want to protect these charter member launch prices now. So you might tinker around that order form. I'm sure they'll put a lifetime or a 2-year offer there where you can.
Yeah, and I love the fact you're saying that, because a lot of people think that the people given the trade alerts are the people that make a lot of the decisions on the pricing and everything. And they're like, why did Bryan increase the price? Like, Bryan didn't increase the price. The marketing team increased the price.
Yeah.
Like so I'm glad you made that clear, because a lot of people think they just associate you with this part of it, and I love.
Yeah, or too, like we have that phone number up there too. You have people. Like, you're not going to call up and get like a robot, and we're not going to call center in India. There's an actual person there. If you have any sort of like membership questions like that, like call that number. There are people standing by. They'll answer the phone. It'll be an actual person. I know most of the we call them our VIP sales concierge. They're great. Couple guys, couple girls. They're really good at what they do. They're very knowledgeable. Feel free to call them, ask them any questions you want, and they will steer you in the direction that you need to. Just kind of like you're at the Four Seasons and you're talking to the concierge. That's our version of them.
Yeah, and Erin Perry, who is definitely in a lot of the services that I help run, is basically saying here, like, she noticed that the total amount of winners at the end of the year didn't even include compounding, just using the same amount for each trade. That's amazing. And I think that's really transparent and really humble of you guys to do that, because a lot of people will try and just display the absolute best results that they possibly can for marketing purposes. And I think that's fantastic that you didn't even include compounding in those.
Yeah, and compounding's something that you can make your numbers look phenomenal if you do this. We just want to put the raw data out there and show, warts and all, here's kind of what we've discovered, and here's how this methodology will perform over this set period of time. And then we don't need any of those fancy math tricks to bump this up, because what we've discovered and what we're delivering just speaks for itself.
Yeah, absolutely. So a couple of repetitive questions here that we've already covered. Hopefully you guys have been listening the whole time here. But yes, emails and push notifications will be given. What happens to the open positions in Trade of the Day Plus? That's a good question, actually. So
yeah, we're going to carry those over. The Trade of the Day Plus positions that are currently in our portfolio, we're just going to carry them over to the new Catalyst Cash Outs Live, and we're just going to put a new section of the track record that's identified as Catalyst Cash Outs Live. Those trades are going to be displayed there. But the Trade of the Day Plus portfolio is just rocking and rolling. Like, we are having a phenomenal. We had a great 2023. We're continuing to have a great 2024. So a lot of these trades I mean, one's up, Crim's Rolls Royce trade is up over 300%. We have a bunch of other 30, 40, 50% winners. So we are rolling. We don't want to cut those positions off. So we will continue to follow those as well as we transition over into the new Catalyst cash out service.
And guys, I'm totally swamped here. I did not expect this amount of questions, and I think we should have a hard stop at 1 hour, just because I really value Bryan's time. I know he's a busy guy, and so I'm gonna select questions. If you have questions that we're not answering here, please email me, stockalertsreviewed@protonmail.com. Most of you will know how to get hold of me, either through my YouTube channel, my email, my Facebook group, my Discord groups. To have these questions answered. So I'm just going to try and select.
Russell, real quick. Look, Coconut does live on an island. I was right. That's awesome.
Is it Honolulu or something? I think
I don't know. He said, yes, I live on an island. So look at that.
Perfect. So I'm just kind of scanning through the comments here. You guys are into this. This is amazing. I'm really excited to see how everybody's excited about this. So I'm just kind of looking through the comments here. I posted a link to the sales page again for you guys if you want to buy this now. Honestly, with Monument Traders Alliance, I've never seen deals as good as this. Their front-end offers that are these types of deals are just absolutely phenomenal. You'd spend more on Starbucks in a week, and probably way more. You'd have to pick the most basic Starbucks coffee or something than you would.
Yeah, if you get a mochaccino or something, that's like $8-9, right? Hey, can I real quick? I just see this question from Tom that came up in the feed. Can I address this one really quick?
Yeah, go for it. Yeah, whatever you see.
He said, how does this trade lose? All right. So this is like I said, we are about complete and utter transparency, honesty. So here is how this trade loses, and the trade loses if the governmental report comes out and the market doesn't react. The market is just don't care. The market's flat. Okay. That is how this trade loses. But based on what we've seen, that is not the case. The volatility, the market volatility on some of these earnings or economic release days is like 8x that of a non economic release date. So we are kind of in a way, Tom, stuffing the ballot box for this and saying the trade loses if the market stays flat or doesn't really react. But we don't think that's going to happen on these particular days, which is why we're trading specifically around that calendar. So that is a great question, and it was something that I wanted to address. And of course, I kind of get off track and on a different tangent, but I wanted to come back to that just to fully clarify how this trade loses and why we're stuffing the ballot box to trade around events that don't allow that to happen too often.
Yeah, and this is what I really love about you guys. It's like you're so open and honest about things. Like you don't cover things up, you don't hide things. Like you're actually underplaying this, which is crazy because this is, to me, one of the most exciting services I've seen in my decade of basically all I do is I review and I trade alert services. And this is one of the most exciting I've ever seen in my career. So
thank you. I appreciate that. I think this is something special too. So I do thank you for recognizing that and saying that.
Yeah, it's true, and it's not just because I want affiliate commissions. My commissions on this are not huge. I'm not going to get rich from Bryan's in particular.
You'll get rich from trading the trades. That's
right, right. And so people are asking, how did they join this? Well, I've posted my affiliate link. If you want to support the channel and what we're doing here, please look at those in the live chat. If you're watching this in the replay, please look in the comments below, and I've posted my referral link where I do get a commission for this. For this. So if you want to support the channel, do that. It'd be awesome. If you want to call their number that you see on the screen there, that's fine too. Whatever you want to do. Let's just do a few more questions and then wrap it up. So I'm just looking through the questions here. Do you see anything in particular, Bryan? I know you're looking at the questions now, that you particularly want to address. So you did Tom's question.
So Nate says, how many of these trades per month on average? I would say you would at least get one JOLTs trade per month, and then probably another CPI, PPI, or possibly a jobs trade. So give or take, I would say 2 to 3 of these economic reports trades would be per month, and then the rest of the month would be filled with either a stock pick or an options pick. Someone asked about position size, and that's basically dependent on you, the individual trader. We always say to start off small, buy 1 or 2 contracts to get the hang of it. And then as you grow comfortable with it, then you could scale up to 5 or 10 contracts or 20 or 100. When you're doing this for as long as we have everyone buying, from the one lot trader to the guy who's buying 20,000 contracts. So we have such a range of people that we could really never say like, here's how many you want to trade. It's completely up to your own individual risk profile. But the great thing about this is when the trades are around, averaging $300 to enter both the call and the put, it's scalable. So you could buy 1 contract for 300. You could buy 500 contracts for however many you want. And the liquidity is so great that you could trade these pretty easily.
Yeah, and we certainly can't tell you the exact number of contracts. It depends on your account size. Like, we can't give individual advice. Like, I certainly wouldn't tell people to buy 10 contracts just because this thing wins a lot. Like, it's really up to you and your risk reward. The cool thing is the minimum is very low. So for people that are maybe like have smaller accounts or just starting out, $300, it sounds roughly, is what they would take per trade. So that's very little. Like that's very little. If you only have a few $1,000 account, maybe $2,000 account, I'd say $300. That's not bad. 1/10 of your account, that's what I would risk on a trade, in particular, just for me personally. So, yeah.
And Aaron Perry said it's really nice to eliminate the guesswork on direction, and that's really the big benefit of this, right? The days of guessing as a trader are over. Like, leave that to the guy in his basement, his parents' basement, right? Like, let them speculate on that, because for every big winner they're going to hit like 10 losers, and they're never going to really get ahead guessing. We're not guessing. This is almost like the trading equivalent of work harder, work smarter, not work harder, right? We're going to eliminate the guesswork of taking the direction. As long as there's a move that's big enough, direction doesn't matter. And this is kind of what's going to separate you, or kind of like take you, like level you up as a trader, knowing this methodology and this technique.
So I'm just posting my email address here. So email stock alerts reviewed, because I think we're gonna have to wrap up pretty soon. So stock alerts reviewed at Proton Mail. And Proton Mail, I'm not hiding from anything. It's just stock alerts reviewed at protonmail.com. And if you want to see the backtest results for some of these things, I'm happy to send them to you. We don't have time to get into it on this if we want to wrap this up anytime soon. So email stock alerts reviewed at protonmail.com for backtest results for that. So yeah, so this has been really exciting. And I guess the last question here would be, does this start next Tuesday? So Unique is saying, does this start next Tuesday? So I guess that's the kind of final question we're going to take, because this could go on forever. You guys are awesome. You're really asking all the good questions. But
yeah, thank you for everyone who attended. I appreciate you. You've had some great questions and great feedback. And this is a new service. This is starting next Tuesday, and then every Tuesday from then on out. So we'd love to have you jump on board with us and see what we can do. Because I as Russell said, this is super exciting. I'm excited about it. This is new. This is unique. No one else is doing this. No one else is trading this. So let's take this first mover advantage that we have and really capitalize on this. And that's what we're going to do starting next Tuesday.
Yeah, perfect. Well, thanks so much for your time, Bryan. I know it's worth a lot. You guys have a lot going on over there, and with the war room and everything. So I've really appreciated you coming on this channel and answering all these guys' questions.
Yeah, you bet, man. Thanks for having me.
Yeah, and if anybody else has questions, again, email me, and I can always email Bryan and say, hey, there's these questions. If this guy wants to join, what does he think? So hopefully we've done the best we can to answer your questions as transparently and honestly and openly as possible. And that's why I love working with people like Bryan and people like Nate Bear, and Monument Traders Alliance in general have been just fantastic. So hopefully you guys have enjoyed this webinar. And if you're not already signed up, you sign up. If you're already part of the whole Trader, what's it called, Trade of the Day Plus, then you will not be so nervous now that things are going to change so dramatically that you lose your everything that you thought you were paying for.
Like so that just came into my head. Like that, what people are telling us is that for the first time in their life, big market down days are actually exciting for them. And the reason that's happening, is because they're making more money on the market down days than they are on the market up. I mean, just think about if that could now be put into place for you watching at home. That's what our people are saying. That's what the ability of this has. Like, markets going up, every idiot can make money when the market's going up. The
Right.
key to making money as a trader is to also know how to make money when the markets go down, and that's what that gives it. And that when that happens, it kind of just the light bulb goes off, and it's like, holy cow, this is where I need to be.
Yeah, for sure. And so thank you very much for your time. And I'll post the video sales letter that you guys have going out so people can rewatch that. You can watch this webinar. You can check out the order page. I've posted it numerous times in the chat here. I'll post it in the comments for the replay. And I hope you guys really are excited about this, because I really have never seen anything like this. And I really am excited about it too. So thank you very much for your time, Bryan. Thank you guys for attending and asking all these amazing questions. We really thought this would only last 20, 30 minutes. It's lasted a full hour. I don't think we should take up another minute of Bryan's valuable time. So let's wrap it up there. So thank you very much, Bryan, for all your insights.
Everyone. Appreciate you. See you soon.
All right, guys. Thank you very much, and we'll talk to you soon. Great. See you guys.